assets. Real value.
Welcome to Financial Funnies on the Charlie Ward Show. This is the last show of the year. Final global financial update of 2025 as we head straight into 2026. Now, if you've been watching the world this year and thinking something feels different, you're not wrong. 2025 wasn't really about markets crashing or booming. It was about trust being tested everywhere, all at once. We've had political resets, financial rewiring, currencies changing their faces, vaults getting drilled, wallets getting hacked. And yes, a very loud return of Donald Trump to the centre of the global financial conversation, redoing just about everything. So let's take this properly, country by country, story by story, and I'll tell you what each one really means as we move into 2026. First up, the United States. 2025 in America was a year of sharp pivots. Policy direction changed fast. Markets had to reprice not just data, but intent. Deregulation talks came back, trade language shifted, energy policy flipped, and institutions suddenly found themselves under pressure again. Love him or loathe him, Trump's return to the centre of gravity forced markets to move rather than drift. For assets, the dollar stayed strong but no longer unquestioned. Stocks became headline sensitive, not sleepy. Gold quietly benefited from uncertainty and crypto didn't explode, but it didn't disappear either. Now, moving on to Germany, and this story really summed up the mood of the year. Over the Christmas holidays, while most of the country was switched off, a professional gang drilled straight into a German bank vault through a neighbouring parking garage and walked away with tens of millions of euros in valuables. No cyber hack, no algorithms, just concrete, patience and a drill. That mattered far beyond the money. Germany is supposed to be boring, safe and dependable. When a German vault gets breached, it's not just a crime story, it's a confidence story. Going into 2026, banks will spend more on security, insurance costs will rise, and customers will quietly rethink where and how they store value. It's not a banking collapse, but it's a psychological crack, and those matter. Japan issued brand new banknotes in 2025 for the first time in 20 years. New designs, new security features, new anti-counterfeiting technology. Japan doesn't rush anything, especially money. So when it changes cash, it thinks decades ahead. This wasn't panic, it was maintenance. Japan understands that trust doesn't renew itself automatically. Heading into 2026, Japan remains steady, conservative and cautious. The yen stays stable but uninspiring. Gold remains a quiet reserve asset and crypto continues to be regulated carefully, not hyped. My opinion, Japan wins by not making mistakes. Next stop, Russia. Russia quietly introduced a new 1,000 ruble banknote. No fanfare, no big announcements, just action. In a world of sanctions, frozen assets and parallel systems, this was about continuity, a reminder that money adapts long before politics admits anything. Going into 2026, Russia continues to build financial plumbing outside traditional Western rails. Gold remains strategic, crypto and blockchain are tools rather than ideology, and the focus stays on domestic. Quiet infrastructure beats loud headlines every time. Now back to the UK, and this is where the mood really changes. The Bank of England has announced plans to redesign banknotes, and interestingly, they've just asked the public for input. And when a central bank does that, let me be clear, it's not about artwork, it's about confidence, it's about keeping people emotionally invested in a currency at a time where the confidence is under pressure, because money only works if people still believe in it. And here's the problem. belief is wobbling. The UK market isn't just quiet anymore, it's cracking. We're seeing real stress across housing, commercial property and financial services. Office blocks are emptying out, valuations are falling, and confidence in the growth story has drained away. Major global players, tech giants like Amazon, Google, Meta and others have just been scaling back, relocating teams or quietly shifting investments elsewhere. Not all at once, not with press conferences, but steadily. And when anchor companies loosen their footprints, the ecosystem around them suffers. Jobs, suppliers, local businesses, tax revenue. Housing is feeling it next. Prices are under pressure, transactions are slowing, and higher interest rates have collided with weaker demand. For a country that built a huge part of its middle class wealth on property, that's not a small issue, that's structural. Financially, Britain feels stuck. Growth is slow, productivity is weak, regulation is heavy, and crypto policy remains cautious to the point of hesitation. Nothing is exploding, but nothing is thriving either. Heading into 2026, capital doesn't need to panic to leave, it just needs better opportunities elsewhere. So yes, Britain is careful, it's cautious, but right now it's also hesitating while the world moves on. And here's the honest take. Boring survives, but boring doesn't grow. And in 2026, survival without growth starts to feel like a decline. Now, heading to Iran. Iran announced plans to remove 4 zeros from its currency. This happens when inflation gets so bad that numbers stop meaning anything in daily life. You don't fix purchasing power, you fix maths so people can still function. Gold and hard assets continue to matter there. Crypto remains a practical tool rather than a speculative one. And going into 2026, the underlying problems remain. Removing zero fixes the calculator, but not the economy. Flying to Australia. Australia confirmed that its new $5 note will not feature King Charles. Instead, highlighting Indigenous culture and history. This wasn't about money mechanics, it was about symbolism. Currency tells you who's in charge and what a country values. Australia's fundamentals remain solid. The dollar stays tied to commodities, crypto regulations remain sensible, and heading into 2026, this is more evolution than disruption. Strong base, changing message. Now, let's move on to Zimbabwe, because this one is probably a masterclass in what happens when trust breaks completely. Zimbabwe has spent 2025 still wrestling with inflation, currency instability and confidence problems. The government has tried once again to stabilise things with new currency measures and tighter control, but the reality on the ground is very different. People don't wait for official policy anymore, they adapt. The US dollar is still widely used in daily life, gold trading remains central, and informal markets do most of the real economic work. Here's the key point. In Zimbabwe, money isn't theoretical, it's practical. People care about what works today, not what's promised tomorrow. Crypto use exists, but mostly as a tool, not speculation. A way to move value when traditional systems fail or are restricted. Heading into 2026, Zimbabwe doesn't suddenly fix itself. Inflation pressure remains, trust in local currency stays fragile, and real assets continue to dominate behaviour. Zimbabwe is not a warning anymore, it's a case study. It shows exactly what happens when trust evaporates and people take monetary control into their own hands. Now, flying over to Iraq, and this one is very interesting. Iraq in 2025 has been quietly stabilising compared to its past, but don't confuse stability with strength. The economy remains heavy oil dependent and the dinar is still closely managed. And government finances move with energy prices. There's been ongoing talk about a financial reform, digital payments and banking modernisation, but progress is slow and carefully controlled. What's notable is that cash is king in Iraq, but digital rails are being discussed more seriously behind the scenes. Crypto exists, but unofficially and cautiously. It's not embraced, but it's not ignored either, especially for cross-border payments and remittance. Looking into 2026, Iraq's outlook depends almost entirely on oil prices and political calm. If energy holds up, Iraq muddles through. If it doesn't, pressure returns quickly. My take? Iraq is walking a tightrope, not falling, not running, just carefully placing one foot in front of the other. And that's why we're still waiting for an RV. And finally, let's head to Vietnam, because this is the quiet standout. Vietnam in 2025 continued doing what it's doing very well, growing without shouting about it. And Vietnam heading into 2026 outlook is one of the strongest among emerging markets. Growth is likely to continue, integration into global trade deepens, and confidence remains intact. Vietnam is playing the long game and it's winning quietly while louder economies argue with themselves. So when you put these three together, Zimbabwe, Iraq and Vietnam, you see three very different relationships with money. Zimbabwe shows you what happens when trust collapses. Iraq shows you what happens when stability depends on one commodity. Vietnam shows you what happens when consistency beats noise. And that really is the lesson heading into 2026. Money doesn't care about promises, it cares about behaviour. Sudan issued new high denomination banknotes amid growing instability. Historically, this happens when purchasing power collapses and old notes stop working. It's not growth, it's survival, economics. Gold becomes essential, crypto becomes an access tool where traditional systems fail. And heading into 2026, inflation pressure remains severe. This is adaptation, not recovery. Now, before we wrap up the year, we have to stop at Hackers News because this story fits the theme perfectly. Trust Wallet urges users of its Google Chrome extension to immediately update to version 2.69 after a security incident that led to roughly $7 million in losses. Around 1 million users were potentially affected. The attacker likely published a malicious version using a leaked Chrome Web Store API key. Trust Wallet says affected users will be refunded and mobile-only users were not impacted. Here's the point. Whether it's a German vault or a digital wallet, value attracts attention. Going into 2026, crypto doesn't disappear, it matures. Better security, better habits, fewer shortcuts. Crypto isn't broken, complacency is. Now, zooming out to gold, silver and the bigger asset picture. Gold stayed strong through 2025, not because of panic, but because of preparation. Silver stayed volatile, dramatic and slightly exhausting. Going into 2026, gold remains insurance, silver remains opportunity with turbulence, and boring assets continue to outlive excitement headlines. So, what's the big takeaway in 2026? This isn't about collapse, it's not about hyperinflation, it's not about overnight revolutions, and that includes the RV. 2026 is about verification over assumption, diversification over blind trust, system adapting under pressure. When vaults get drilled, wallets get hacked, currencies get redesigned, and policies flip direction. Money isn't telling you something. You don't need to panic. You just need to pay attention and diversify your assets. That's not financial advice. That's Financial Funnies on the Charlie Ward Show, the final financial update of 2025. We'll see you in 2026 next week. But for now, Happy New Year, everyone. God bless and see you soon. But for now, bye bye.